Tomorrow's MYEFO budget update is expected to include $16 billion in spending. Joining us live now is economist David Bassanese. David, thank you for your time. What's your expectation around the set of figures that we'll all see tomorrow in that budget update?
Hi, yeah, good to be with you. I mean, certainly the report suggests that the budget outlook is going to be downgraded. I mean, we're hearing a combination of things. Cost overruns. I'm not exactly sure what we were talking about there, but they say there's unavoidable costs that they need to meet, which I would have thought would be budgeted for already. And then some downgrades to the revenue outlook on the back of, weaker commodity prices. But if you look at the budget, I mean, the iron ore price is already pretty conservative. So I'm not sure what they're going to do with the iron ore forecast, because at the moment, iron ore is still around $100 a tonne. They've got it coming down. The budget forecasts assume it will decline to about $60 in the first quarter of next year. So the commodity price forecasts already seem fairly conservative to me.
So if we are indeed looking at billions of dollars in new spending, what impact does that have on the domestic economy?
Well, I mean, it's more, the budget deficit being bigger than we otherwise thought. I mean, it adds to the stimulus coming from the public sector. And I guess, in terms of, it means if you think about the interest rates, I mean, the Reserve Bank would be looking at this spending and, making it another reason to be wary about cutting interest rates anytime soon. So, again, I'm not exactly sure what we're hearing bits and pieces of reports, but I mean, maybe there's some spending that's coming into this mid-year review rather than being in the election campaign. It's maybe from a political point of view better to spend it now rather than spend it during the election campaign. Will there be a lot of focus on, adding to pressure on interest rates and public spending potential overruns?
Well, yeah, you're right. And looking at the politics of this, of course, we're not sure if Jim Chalmers, the Treasurer, will actually get to hand down his next full budget next year, or if an election will get in the way of that. There has been a lot of speculation that an interest rate cut could actually determine election timing. Do you expect that we will be seeing an interest rate cut early next year?
Look, my base case is no. I mean, I think we had a very strong labour market. Well, I know we had a very strong labour market report last week. The unemployment rate ticked back down to 3.9%. Inflation is still underlying inflation above the target band. The RBA is sort of waxed and in terms of their commentary of late, it's sort of been waxing and waning. On the one hand, they've downgrading the prospect of a rate cut. The next hand, they're sort of opening the door a little bit. So. I think, we need to wait for the inflation report in January. That will be a big determinant of whether they could cut rates in February. But I don't think the report is going to be good enough for them to be able to cut rates in February. They could go in in April. But if they go in May, it would be probably late after the election, because the RBA meeting in May, I think, will be after the time in which the election would need to have taken place. So if they don't go in February, they don't go in April, then, we're unlikely to get a pre-election rate cut.
David, always appreciate your insights. Thanks for joining us.
No worries. Great to be with you.